Today we're going to talk about 3 great reasons why you should stop stock trading. I'm Alexander and I help stock traders with risk management. Below this video is a timestamp of today's subjects and additional resources for you. So let's get started. Reason number 1, it's a good one, and that is having exponential profits. Now, you want to always stop trading in a position of power, and there's no better way than to stop trading when you experience exponential profits or an exponential profit run. So let's first define what is exponential profits. These are profits that are larger than normal and they appear very, very fast in your account. And that's because you caught a definitive trend to the upside, and a strong definitive trend with a lot of momentum to the upside. You rode that wave and now you have exponential profits. So congratulations. But there are downfalls to having exponential profits, and we're going to talk about that in a little bit. So you can have exponential profits. I'll give you an example. Let's say you're trading your favorite stock and it moves $6 to $8 per day. And today you identify the stock is going to go up. It meets the criteria that you're looking for. You go long. And now this stock in the first, let's say 15, 30 minutes, an hour of the day, it makes a move of $6 to $8. That means that trade experienced exponential profits. Now you can have exponential profits on a per day basis, maybe a couple of days, maybe you go on exponential profit on 2 or 3 days, and you're really in sync with the market and you're really reading it well and your strategies are outperforming. You're just in the zone. And when you're in the zone, it's exactly that. You can get zoned out and kind of feel not invincible, but right, you want to push it. You know, see how many profits, how many trades can you really, I wouldn't say win, because you can have some losing trades even in exponential profits, but obviously your profits are a lot larger than your losses by a lot. So you're riding the wave of euphoria, what to do, and if you experience this, here are a few things you can do. Number 1, take a few days off, right? Number 1, take a few days off. Number 2, remove some of the profits from your account. Number 3, have rules in place to say, okay, if I place the next 2 or 3 trades with the correct risk management, of course, and they're losers, I'm going to stop trading, take a couple of days off, maybe take the family out, maybe pay down some debt, or remove the money from my account so it's safe. But you have to do something because you want to be in the flow state of making decisions, and you will see that a lot of the mistakes happen when you become paralyzed. And this is a good thing, right? You're having exponential profits, but you want to now see your account grow to certain levels. And as a new trader, you don't realize that sometimes this backfires. And here is the downfall of having exponential profits. In the back of your mind, unfortunately, when you have exponential profits, some thoughts start seeping into your trader's mind and they say, you know what? I should have had a bigger position. And now you can easily turn some good energy into bad energy, and you may now feel bad. You know what? If I had a bigger position, I would have had, 4 or 5 times the profits, even though we're exponential, but now we're talking about astronomical numbers, right? And, you get the confidence, well, I have some profits, I can risk some profits, and now you place an aggressive trade and boom, it's a loser. Now you're in shock. You're not ready for this loss, or maybe we're even talking about a very fast loss, or the losses are this one trade or these few trades now are starting to wipe out, and you're in the momentum on the other side. They start wiping out all your profits plus more. So what you're protecting here is not so much your account, your finances. You're protecting your mindset and your emotions. So that's why when you go on an exponential profit run, have rules in place to protect you so you have a good solid mind for the next trading opportunities. Exponential profit runs don't happen often, so don't look for these exponential profit runs. The market will dictate how exponential your profits are. So you always want to control your risk. And this is part about having a risk management plan so you don't give up all your gains. All right. Example number 2, and this is an unfortunate one, right? And this is in a position of weakness. We first spoke about a position of power, position of weakness is that you have a devastating loss. You experience a devastating loss. Now you're hurt mentally, emotionally, and financially. This is the same thing when an athlete gets injured and they have to sit down. Or you're in a game, right? If you played in the athletics and you're getting blown out, there's no reason for the starters to be in the game, and they just go inside, take a breather, go to the bench, and just, okay, let's reassess for the next opportunity, the next game. So when this happens, your mind and your emotions are at levels that are very high, but they're negative. They're very intense, and a lot of negative self-talk. Right here, you're going to have rules in place to say, okay, number one, what triggered this devastating loss? What happened? Was there something mechanical? Was there something like we spoke about? Maybe the stock shot up very fast and you weren't ready for that. You'd have your stop losses in place. Or was it that I got triggered to place an aggressive trade? So find out those triggers and try to eliminate them and make sure these are not frequent occurrences. I have a video, I'll put it in the link below, about categorizing your losses. So when you experience a devastating loss, you're going to have to cope with that emotionally. You have to cope with the energy, and you have to have a release. So make sure you do it in a positive way. Make sure you talk to other traders. This, unfortunately, is normal. So don't feel it's an isolated incident, but do have rules in place. You know what? I'm going to take a couple of days off. If you do continue to trade smaller until you get some rhythm. Maybe go back into sim. Maybe not look at the market for a couple of days. But you definitely have to do something to make sure you don't continue the momentum to the downside. Because here is where the maturity, once again, what trader A and trader B does. Trader A pulls back on his size, take a couple of days off, and deals with it, even though it's a tough situation, but deals with it in a positive way. Trader B, that has not developed the maturity, they continue to trade, but trade more aggressive because they want to get their account back to these levels while they feel better about themselves, and they feel like, okay, at least I erased some of the mistakes that I did, and if I get my account to this level, and guess what, they trade a little bit more aggressive, and then they kind of magnify the losses and could maybe possibly wipe out their account. So make sure that you have rules in place for emotional triggers, financial triggers. If you have, let's say, a devastating loss on one trade, maybe stop trading for the day. Maybe you are consecutive losing days, maybe you stop trading, pull down your position. So these are all ideas for you to implement. And the last one, I'm just gonna give you some ideas. It's more of a encompass of all these ideas of, okay, when is a great time to not trade? It's good, to not trade earnings, to not trade FDA approvals. The risk is too high. Maybe Fed meetings, these are too high. These are all trading scenarios that you want to avoid. Holidays, maybe certain news events, a lot of political stuff that comes out of news. These are all great times for you to be in cash and to understand that you don't have to trade every day. Have kind of those impulses and say, you know what, I'm only going to trade when these scenarios. And the more and more you trade, the more you'll understand when not to trade. Not so much because you could have made money, but because it takes too much of your energy, your mental capital, and it throws you off rhythm. You don't get in sync. There's a certain level of confidence that you have to have and resilience, and you want to be able to kind of interact with the market in the best possible way. So find out when you trade your best and make sure you do that routinely. So find out when not to trade, and these are some of the scenarios. So thank you so much for watching, and there are going to be additional videos here for you to watch, and make sure that you're always trading safely, and I'll see you in the next lesson. Take care.